The markets have been retracing, coming back down, which is good. The dollar also came back down. We've got quite a few central banks out there raising rates. This is the British. There's a lot of talk of raising an extra 25 basis points. So that's obviously having a bit of an impact in the currency markets and also people's thoughts on the Fed. But let's take a look. So S&P come back down here. That's nice. I think we'll go a bit lower, maybe 430, at least test that breakout range. I mean, the whole thing's ridiculous, so it's not asking a lot just to come back down a bit more. So, I mean, resistance on the upside, obviously, it's the recent high. Let's call it 444. And then the next is 460, the big number, maybe 450 pit stop on the way. But for me, I'm really looking at the levels on the way down because I constantly think it's going to go back down. And at the moment, we are going lower. I mean, this is a bit of a topping play here, and we closed at low of day. So no reason not to think it will continue lower today. Looking at the Nasdaq, same sort of chart pattern, toppish, close at low of day, back down. We could test this breakout zone of 357-ish, but I really think we're going to go back down to 350 quite quickly. Again, not asking much. The Nasdaq's been on a tear, and it's the weakest market out there. So what goes up a lot will come down more. So I think Nasdaq back basically to 350, and that's really not asking a lot lower to go after that, but we could have a little bounce. Dow Jones, so the Dow and the Russell, that have been weaker for months, I would say, they were not the weakest yesterday, but they will, it doesn't really matter, they haven't gone up that much. Point is, I see this horizontal, that recent low of Wednesday the 14th, that sort of, it used to also be a bit of a resistance point here. So for me, that's the level you want to close below, and it could do it. If the Nasdaq and the S&P come lower, we close below that, then we could start seeing a bit more acceleration on the downside. But the markets influence each other, so it's just a level to watch for the Dow. And the Russell has already broken, you could say, its local support zone. So yeah, I think the markets will go back down. And the Russell, I think it belongs down here at some point very soon. So 180-ish, we should visit very soon. And if the markets start to turn a bit more ugly, then we'll go back down to the low 170s. So that's my take on the markets. I think that we're going lower. Those are the levels I'm watching for these four markets. And today, nothing special. I just expect more downside, nothing too aggressive. And the Nasdaq being down 1.5%, not even, that's not that aggressive. You want a sort of a -2 to 3% day. That will probably start to put fear in some people who are otherwise constantly bullish. Let's look at the banks, kind of following the Russell, I would say. I mean, look, they have not rallied that much, given, look at what the Nasdaq did, look at stocks like Nvidia. So they haven't rallied that much, and it just takes a couple of, maybe just the next day, a close below this level on the XLF 33, just a close below 32.80, and then boom, you'll start to fill this gap, see you at 32. And then when you're at 32, you're basically at the lows again, then if you really want to zoom in, you can start drawing an ascending. We're here, and then once you close below the ascending, we're talking about the absolute lows. But by then, you probably got these markets, especially the Russell and the Dow, especially the Russell, flushing. So it doesn't take much. It doesn't take much, and I really look forward to a bit of a surprise, a bit of a drop. And I think the banks will be that catalyst. The banks and the Russell, for me, they're the weak links in the chain, and that should drag everything else lower. But who knows? Maybe it's the Nasdaq just retracing and retracing an aggressive pop it's had, and that's all it takes for the others to lose their key local support levels. KBE and KRE, I look at them together. Again, they are the weak ones. Look, they're just holding the ascending. I don't want to be too detailed about it because I don't exactly spend too long making sure I'm really, really precise. This one looks pretty precise, but look, we close at the level, so maybe a small bounce. But what if all the markets are red? You can't really have a bounce in the KBE. The KRE kind of closed below it, so maybe that's all it takes. And the KRE is a little weaker than KBE, even though their charts look identical. So, back down we go. And if the banks just go back down a little bit, it looks very weak all of a sudden. And then, like I've said already, the Russell will start to look weak, and then the big strong S&P and Nasdaq will look a bit more toppy. So I'm still bearish. and I sound like a broken record, but you know, now the banking stocks look quite weak, and the Russell always has. So that's the markets. Those are the banks. Let's look at the interest rates, always the most important sector. The 1 year is always just flagging at the top here, waiting to break out. It just looks very bullish, you know, very bullish. The only thing that can destroy this chart is a massive rout in the markets and people buying bonds, thus putting a cap and dropping yields. But for me, we're just going to rise. I'm looking for that 5.3 close. We still haven't done that. I don't think we did that, but you know what I mean, like a close above the high of all these tails, that will really signal like a 5.34 close. So just going higher, that's my prediction. The 2-year, look, just grinding higher, and you can see that was a decent. I just see this going up to 5% and then dropping, and then basically just going above, you know, closing above 5.1. So I mean, we're not there yet, but look at this beautiful strength. So continuation, 5-year, same thing, but it just gets a bit weaker the longer out you go. But look, you know, it's grinding higher, and what the 1 year will do, the 2 year will follow, and if the 2 year goes up, everything else slowly follows, but weaker and weaker the further out we go. Look at the 10-year here. Look at the difference between the 5 and the 10-year. Already you can see that, you know, here we've got to break, we've got to close above the descending line here. Where did that go? Oh, you know what I mean, this one here. So we've got to get basically close above this high, 3.85-ish. But the 10-year is very important. The 30-year, look at that, weak. You know, that's the biggest one. That's where the difference really is. It's, I mean, you know, it's not even about going up. It's about holding support at this point. So if we close below 3.8, I mean, it's not going to start going down if everything else goes up, but you can see the yield inversion here, you know, where the 3rd year is just sort of going sideways down, if anything, and everything else is creeping up. So look at that, and that just signals recession. And we're in a recession. We've been in a recession for a long time. It's more and more obvious. Quick look at the EU, grinding higher slowly but surely. This might be the most important one. I mean, the European markets, the European economies, and the debt levels and the ability to service that is just horrible. And, you know, Greece, Portugal, Italy, their problems have only been plastered over. So that's a massive flock of black swans just flying around there. The EU debt burden. If we look at the British, that too. I mean, look at the 10-year. That's made the news recently. I remember bringing that up. Just constantly grinding higher, and it'll just take 3 or 4 business days for this to start testing and closing above, you know, 4.5, 4.6, and then it's in the headlines, and then who knows, then the US yields start to rise. It's all about confidence and psychology, so things can change on a dime. Those are the treasuries. Let's look at the dollar now. The dollar's been very interesting, because I said, look, it takes a couple of days to figure out whether it's really ready to rise from here. You can see, you know, obviously we came back down to a level 102 is a big round number. We retraced all of this. 102 is basically where we were going sideways and launched from. So we've come back down. You can't just pop and go all the way up. I mean, unless it's news, it's rare. But what happened? We had a bit of a rise. We came back down. Now we're actually trading below 102 this morning. But for me, we're just going to be holding, going sideways at 102. I think after a couple more trading days, if we don't rally, then okay, it's still not got enough strength here. We need to go back down to, let's say, 101 or just above 101. Let's be honest, 101.5 probably. But I just feel like it's undecided yet whether the DXY wants to rally from 102. I think it will rally from this area, or just put it another way, you know, even if we go lower, I think we will actually go a bit higher and at some point go here. Just feel like we have to visit this area. But for now, whether we dip lower or bounce straight away, it's just all sideways, up, and then comes the decision. You know, if it fails again here and goes back down, then we're looking for a flush, let's say, of this critical 100.8 or 101 level. But if we start to rise maybe a bit higher by then and start to pop our head above this, then we're looking for a move. You know, obviously we'll be testing this horizontal line, but ultimately the 105, 106 zone. So I'm not looking into this too much, but what I will say is, well, I'll get to this in a second, but gold and silver are not acting strong. Like that, it has all the reasons. The dollar has been a big reason for gold and silver being under pressure. And with the dollar coming down here and then failing again yesterday, this big drop yesterday back to 102, where we are now, did not provide gold with the excuse to rise. So for me, especially silver, the weakness in the metals, despite the weakness in the dollar, not a good sign for the metals. So, but still interesting nonetheless. I still think we're going to be grinding sideways at 102. But if we do go lower, which it looks like it wants to do so far this morning, then 101.5. I don't know if we'll get to 101. That's a bit too much. But let's see. But still, decision time soon, right? Just like uranium, you can see this chart here. I mean, let me just get rid of this crap I just did all over the place. But you can see how we are probably at most a couple of weeks away from a big move. And by big move, I mean either a breakout to test 106 or 97, you know? We'll go straight past 100. Of course, if we lose 101, there'll be a small bounce during the day, but 97-ish, 98, 97. So, and imagine having a 90 handle on the DXY, that'll move markets. So let's see what happens. I still think we're going to have a bit of a move higher. It's not over yet. There's one last hurrah. Okay. Commodities. Copper. Now, this has acted okay with the DXY weakness. So fair enough. Kind of a strange chart. To me, copper's been the hardest to trade. I haven't traded it, but it's the hardest chart to call. It's long-term up, keep it simple. Medium-term up. Short-term, pretty difficult to call. So it was weak. At some point, it was a bit obvious it wanted to go a bit lower. But look, we flushed the ascending and then bounced straight off the one horizontal just underneath, and then straight back into the ascending, and then we've just gone up, probably with the dollar going down more than anything else. Also, the market's going up. Copper likes that. But, you know, markets have been going down the last 2-3 days, but copper's rallied. That's probably because of the dollar. And here we are just testing basically 4. You know, you can see this horizontal level is pretty correct, but there's one just above. It's the psychological 4. Can we close above 4? If we can, then we go straight to test 420, essentially. But can't really call this week. If we go back down, then again, at least the ascending should hold. Gas. Finally, gas looks like, I mean, it looked like it before here, but it looks like it has decided to not go below 2. I mean, it's a bit late to say that, but I'm in 2 out of 5 tranches, so I kind of wished it went low. But at this point, I'm looking forward to a move up, actually. I'm getting a bit bored of this grind down here, so go up, let me take some profit, and if it wants to go back down again, it can. But it looks like, and the more you zoom out, the more bullish it looks like it wants to seriously go higher. I mean, it's taken out already this one here, popped above, gonna go, for me, it's 2.8. You want to close above 2.8. Yeah, you'll touch 3, go back down, but I think we're going to go way higher than 3. So for me, it's about this old high here. If you can, I mean, I was going to say touch it, but this counts as a touch. Close above it. And could it happen today? Yeah, it could actually. It could happen today. It could happen in a couple of business days, but I think we close above 2.8 and we touch 3, go sideways 1 or 2 days, and then we start to rally to the gap fill zone. So natural gas looks very good. Can it go back down? Of course it can. I don't think it will. Oil, this one has been surviving this zone here. So much buying, so much strength. I haven't got the volume here, but I'm sure there's quite a bit. To be honest, when it lost this ascending and looked weak, despite the Saudi cut only sort of sending it up a little bit, I thought we're destined to go into the low 60s, even 50s, but it's just been holding. And what doesn't go down, to me, this suggests we're not going down. That if it was going to go down, it would have been here. And then, okay, I think it was then that you had the Saudi announcement, and then it failed, went back down. It's there. Like, okay, the chart's weak. fundamentally, you had this big surprise announcement that should be bullish. We're down. It should be now, but it's rallied again. And I don't know. For me, it's strong down here. If I was a bear, put it this way, just flip the tables. If you were a bear and you were short here or you want to go short, wouldn't you be scared? It's just not going down. And fundamentally, you know that there are real supply cuts, and the dollar, for example, is not long-term bullish, let's say. For me, oil, a bit like gas, a bit like copper, long-term, even medium-term up, short-term, I wouldn't say down anymore. So oil looks good to me. But, the way I trade generally, I wouldn't just be all in at a certain price. I would have 3, 4, 5, 8 tranches, and I definitely would have bought down here. But I've got my little oil stock, and I'm happy with my buys. If oil goes lower, then I look forward to buying more. But I actually think it's going to go up. Uranium. Uranium. I hate visiting uranium. It just reminds me of the mistakes of not entering down here when I had the chance. Daily. So we broke out of this descending. Well done. And now, to be honest, even if uranium goes back down again to test 21, still very bullish. It's a bit like that silver when it broke out. You retest your descending strategic breakout. Look at this very significant breakout. Go back down. Look, it's had massive candles. So you can respect a bit of exhaustion retracement and then bounce off the descending or maybe even the horizontal, whatever, 21, 21.5, and then go back up and then basically test 24. 24, very, very obvious level. And then when you close above that, it's 28, and then you're good. Then you're good, 30, and et cetera, et cetera. So that looks great. I would be surprised if it keeps going up because there's quite a lot of ferocious buying here, and maybe the market's dropping. That's the excuse uranium needs to retrace a bit more, but it's a buy the dip candidate here. Okay, gold and silver, weak. It's below the ascending support. It's bad closes, daily closes. Yes, we had this little hammer. But look, gold's dollar has been very weak, as we've seen. You'd expect gold to be 1970s at least. Also, not just the dollar being weak and gold not going up, but the market's been weak and gold's not been going up. So, the two propellers behind gold have not been working. And for sure, yeah, you can have the dollar rallying with gold. You can have the market going up and down and gold moving, in opposite directions either way or in the same direction. So it's not always 100% correlation. But recently and usually, the dollar going down means gold goes up. The market's going down has meant gold going up during this bear market during the last couple of months, and it's not been happening. So for me, gold needs to come down. I don't see a reason for it to really hold here. It's underneath obvious support, not just the horizontal, but the ascending. So, I mean, unless the dollar flushes, then, I just feel like overall gold just needs to go down, regardless of what every other influence does. And where do I see the support? I mean, the resistance has been obvious, right? The resistance is just what prior resistance has been. It's the 1970 to 1980 zone. These two lines I've drawn, let's say 1972-ish, 1982-ish, whatever, that sort of $10 range, you could expect some resistance if you start venturing there. After that, then it's probably going up more than 2000 because, we haven't breached this zone. So I'm not going to look at resistance on the way up beyond 1970 and 80 because I think it's all about holding support. I don't think we have any obvious support. It first needs to rally above 19, let's say 40, and hold above 1940 to reclaim this horizontal. Otherwise, on the way down, I don't see anything obvious. 1920, no. 1900, big psychological number? No, I don't see any technical. I mean, here it was a bit of but more recent price action, which is more important than the prior price action. I don't see any obvious 1900. I see kind of 1870-ish to 1880. a bit like this actually, 1970s and 1980, 18. But the point is, on the way down, I don't see this 1920, this prior yesterday's support. I don't see that, except for maybe just an intraday support. But 1920 and 1900, not really support for me. And if you got gold coming back down, then I think there'll be a lot of momentum on the way down, actually. And if the dollar goes up, imagine gold's been going down despite the dollar going down. And that was that moment where the dollar rallied like 0.1%, hardly anything, and gold just went down. Crazy. It's that day that silver was down 3%, not yesterday, the day before. Let me look at that actually, because I think that's very important. This day here, yeah, Tuesday. So on Tuesday, I hope I got this correct. I mean, silver got absolutely smashed all the way back down to this support zone, which I drew. It was kind of correct, but we closed below it actually. I mean, silver, just since we're talking about gold and silver here, silver's been, I actually mentioned that silver had outperformed gold. Well, right after that video, it made up for that. It, you know, inversely, silver really lost ground to its outperformance of gold. It's just in the last 2 days, just been destroyed like 5% or something. What is that? From there to there-ish, 5, even more slaughtered. So, and that's bearish too, right? So you've got that, which is bearish. You've got, it's not reacting to dollar weakness. That's bearish. It has not been going up to the market going down. All these bearish signs, keep it simple. The metals are bearish. And I don't see much support. So, but yeah, look at this. You know, on this day here on Tuesday, what did the dollar do? The dollar, where's that little Tuesday? Yeah, okay, so it looks like an indecisive day, but the dollar was up just a little bit. Look at that. Hardly anything. And you got silver down 3.5%. That's crazy. You'd expect a massive dollar up day for that. So that for me was a telltale sign. Like, oh my God, you've got silver just getting smashed 3%, and the dollar hasn't even started to rally yet. You know, it actually lost a lot of its rally. So look where we are now with the dollar. Imagine the dollar index just grinds sideways. It just sort of closed at 102, just a bit higher. Imagine it has a green close today. And then we start to reverse and go up. Imagine where gold will be if the dollar does start to go up all the way up here. It'll be in the 1870s, 1880s. So that's my point, really. You've got gold looking weak despite all these influences. And imagine you start seeing forget the markets, just the dollar going up or just not going down. Okay, let's look at, so yeah, just to cover gold again, I think honestly, it's weak. I see 1870, 1880. Let's see what happens. Yeah, let's see what happens. Silver, by the way, because silver now looks like it has the same price action as gold. I mean, look, silver is taken out its lows from late May, just like gold. Gold's at sort of new lows, new local lows. So silver's caught up there on the downside. Silver, look, it'll probably hit the ascending 21 point by the time we get there, 21.5-ish or 21.4. 21.5. You got this little support down here. So maybe silver creates the support for gold. That would be interesting. But otherwise, I see gold around 18, yeah, 18, 17, 18. Okay, I hope that's pretty clear. On the downside, GDX. I mean, I'll start with GDXJ. GDXJ looks weak. I mean, you got this heroic attempt to close just above, you know, Tuesday's low of day. Kind of did it, but it's not bullish. It's a nice attempt. It needs to really rally and at least get above this horizontal. See that low from there, it's trying, but at best I expect a retest of this ascending and then back down again. And since, you know, I think gold and silver are going to go back down, the miners will have to follow, probably back down to at least 34 on the GDXJ, maybe even 32.5. We know how weak the GDXJ can be, so on the downside. So despite this heroic attempt, back down. And also look, it's clearly below the ascending GDX. Also heroic attempt to actually stay within the ascending, and also it's sort of within the horizontal line. I haven't drawn it, but you know, the last low from down here, let me draw it. It's all the same, this sort of level here, you know, the low, the low, the low here, the low, and then it rallied, just holding, you could say roughly that low, that horizontal low, closing within it. and the ascending. So the GDX may have just saved the day. Let me get rid of this. It looks like it's more downside. But yeah, you know, look at the GDXJ is weaker. Really tried. It's already lost the ascending. The horizontal it's kind of got, but you know, look what I think is going to happen to gold and silver. I think if the dollar has any strength, we go lower to 1900 and then flush that, then maybe it's a good buy. So I would not be buying right now. I'd hold what you've got. That's what I'm doing. And that's my take. Last thing, Bitcoin. Cannot ignore Bitcoin. Unbelievable strength. You know, this move up here reminds me of this move here where it was just a flush, little head and shoulder flush, and then bam, bounce to new highs. Here we had a little flush. Okay, it wasn't head and shoulders, it was just descending. I remember this here, I didn't pay attention to Bitcoin much because it was kind of boring, but I did notice it rallied there and then hit resistance. Then it looked a little bearish and it did go lower, but then look, it hit the ascending support. I hadn't touched these lines. I still haven't, kind of just touched it here. Also the horizontal. So it hits support. Look, it's horizontal resistance, hits it as support, also coinciding with the ascending. So this was around support, clearly. But look at this. And this is obviously the BlackRock Fidelity ETF, all this stuff. It just screamed past this descending. And once you close above a descending, for me, it's the best chart pattern, just continued. Now we're hitting resistance, right? Look at this. My God, it's just so, I was going to say easy, but trading isn't easy. It's just, in hindsight, it's obvious. And look at this, right? Okay, it didn't touch it perfectly, but it never does. So roughly there, look at these greedy people buying here. And now we're just going to go sideways or a bit lower, but it looks good. It could go quite a bit lower, bit of retracement. 28,500 maybe, back down to this level. I'll draw that because I reckon that will probably happen. Back down, and then let's see if we can close above 31,000. But Bitcoin looks great. I think this whole ETF thing is a bit of a inside game, let's say. But whatever, that was the catalyst they needed to break out, and Bitcoin looks good. And so do the crypto miners, actually. Okay, that'll do. Hope that was useful. Good luck today. Let's see what happens.